All I want to do is kind of just answer this question because it comes in multiple forms. You can't do this. Why wouldn't you just pay bills like you normally pay bills? Or the theme is not that you can't do it. The question is, why would you do this? And the truth is this: if we continue to do the same things that we've always done, we'll end up getting the same results.
It's a mindset thing, right?
Once you use a dollar once, there's no place else for it to go other than to that bill.
So it goes today.
When you pay from your checking account. That is correct. My objective then is to just kind of break down the concept of how to use the same dollar multiple times. And to do that, I just wanted to make it kind of basic. Let's say income is $100. Like the total income for the month is $100 coming in. And you only have two payments from that $100. There's a $25 credit card payment and there's a $25 mortgage payment. That's it. There's no other bills associated with this income. Again, I just want to pare down this example. This is just simply an example, simply my opinion. This is not financial advice. This is saying if as income you only had $100 coming in and you had two payments, and the balance on that credit card is $100. And it's actually maxed out, meaning the credit limit on that credit card is $100 as well. So it's a maxed out credit card with a $100 limit and a $100 balance. The amount that we're going to put on to that credit card, which we're going to use as our debt tool, is $25. So if we were to do that,
Just simple math.
How does that look? Just want to make sure everything fits.
I'm gonna be honest. It looked nice and neat when I gave it to you.
So again, income coming in. That income is a total of $100 going into your checking account. Let's assume that you can't get multiple uses out of a dollar. What would normally happen? Okay, when that $100 goes into your checking account, there's two things that are going to happen. That $100 is going to pay a bill of a credit card, and that $100 is then also going to pay that same bill for your mortgage. So ultimately what I'm saying here is when that $100 comes in, $25 is going on a credit card, and then $25 is also going on your mortgage. So when you do that, when you pay $100 from your checking account and that $25 goes on that credit card, that balance that was $100 comes down to $75. And when you put put $25 on your mortgage is now paid. So this is done. But what's left in your checking account is $50. Again, $100 came in, 25 went on the credit card. 25 went on the mortgage. You have $50 left over. And if you wanted to, so to those who say, why would you even do this? If you wanted to, you could then take this $50 and put it onto the balance of the credit card. Just pay it straight from your checking account and take that same $50 and put it on the credit card. And if you do that, the balance on this credit card would then become, very simply, $25. Like pretty simple. So do you need Velocity Banking to be able to pay this balance down? You don't. You don't need Velocity Banking to do so. But what if you did use Velocity Banking and that same $100 went from your checking account to a debt tool, all $100 of it? Well, when this $100 goes on to this debt tool, what does it do to the balance? The balance on that credit card now goes down to zero. But you do have to pay bills from the debt tool. We only have one bill. The one bill that we have on this debt tool is our home. So if we pay $25 from the debt tool onto our home, pay that $25, the new balance that's going to be left over on the debt tool is now $25. Both of these ended in the same end result. $25 left on this credit card compared to $25 left on the debt tool. It ends in the same place. But what did you accomplish when you put $100 onto the debt tool? What did the credit company say to you when you paid off this balance and it went from a $100 balance down to 25? I'm going to say the credit card company saw that as a positive. And then in addition, this is the other piece that I want to make sure is clear. What are the other things associated with this debt tool? Meaning when you pay bills from a debt tool, there's a cash back opportunity. There's a points opportunity, meaning what about gas and groceries or whatever those options are when you do that 3% cash back or the other perks associated with having a credit card. So not only did you end up in the same place, but you also achieved some other perks associated with that card. So I am not saying velocity banking is the only option. But what I am saying, there's an opportunity to pay that card off faster using velocity banking. And the truth is this: if we continue to do the same things that we've always done, we'll end up getting the same results. So a lot of the feedback that we receive from people going, why don't we just follow, or why don't you just follow this process? Well, those people who follow this process are probably not in debt. Those people that follow that process probably don't spend beyond their means. Those people who follow that process probably make a purchase when they have the money available. So I agree, you can follow that process. But what about for those who don't? What about for those who don't fit that same criteria? What about those who have gotten themselves in a position based off some emergency or some health related issue or student loans or whatever the reason is? What about an option for those who may not be in that same position? This is that option. And that option is to be able to use a debt tool, use the same $100 onto a debt tool, pay it off faster while addressing your same bills and achieving some other opportunities. Once you use $1 once, there's no place else for it to go other than to that bill when you pay from your checking account. That is correct. And to be clear, did I use $1 more than once? That
Yes.
$100 came into my checking account. When I put
Right.
that $100 onto this debt tool, it took care of that $25 balance.
Right.
And I didn't use all 25 that was originally due on this payment vehicle, this debt tool. I used money out of this 100, meaning the other 75 is what I used to pay this mortgage. So that 75 went onto this debt tool, created room, and then 25 that was sitting on this debt tool then also paid this mortgage. That dollar went from here to here. I used the same dollar multiple times to address two issues and received other perks from it.
Yeah, well, I want to talk about the perks because this is really where not only are you, velocity banking is not a wealth strategy.
It is
It's
not.
not.
It is not.
It's just a debt reduction tool.
It's a
So,
way to free up cash flow.
right. But it is not a wealth strategy. It does not grow your money. It saves you from spending more money, like I was just talking about with the house, but it is not a wealth strategy at all. However, you're already using the money out of your debit account, out of your checking account. If you're already paying bills, if you're already buying gas, if you're already doing all of these things through your checking account, why not do them through your credit card, knowing that you'll get cash back, knowing that you'll get miles, knowing that you'll get points? There have been so many trips that we have taken just because of groceries, rental cars,
Very true. Very true.
flights, hotel rooms, all just because we were just using that card for groceries. We would have used our debit card anyway. And I'm going to tell you right now, the bank wasn't giving us anything. They weren't sending us on trips. They weren't doing anything. They weren't doing anything but charging us a fee every month for using it.
That's right.
So at minimum, this is the smarter, not harder method. And I don't know anybody who wouldn't benefit from these extra perks that come from using this system.
Can you pay a credit card with a credit card? Can you pay a mortgage with a credit card? You absolutely can.
When people see this and they see what we're doing, they go, what the? How are they doing this? We've already done it. What we're currently doing, what we have been doing for years, and it works.